Folks, you, the consumer, you continue to power this economy. As we saw again this morning, I just talked about it. We had the GDP report. The consumer spending was the biggest part of that. And get this, the big winners, two beaten down consumer names, Soaring, Carnival Cruise Lines, and Winnebago. Now, these names represent real discretionary spending, right? You don't go on a cruise unless you've got cash and confidence, and you certainly don't buy a Winnebago if you don't have cash and confidence. The question, of course, is can this continue? And if it does, how can you make money? I want to bring in Kingsview Wealth Management CIO, of course, Fox Business contributor, Scott Martin. You know, Scott, in October, I talked about this. You can see some of the data coming in. We were buying. Tesla had a good earnings number. Winnebago had a good earnings number. Harley had a good earnings number. Yeah. Polaris had a good earnings number. You know, these are discretionary things, and that was a quarter ago, and it continues. Can it go into 2020?
Yeah, in fact, I think it can continue, Charles. I mean, I like the way you kind of summarized it, which is you don't buy those things unless you got cash, or unless you're confident. And if you just look around for once, you know, if you're at home and you think about your situation, whether it's your IRA, your brokerage account, your 529 kids account, your 401k, maybe your home value. Certainly when it comes to refis, you know, another thing, Charles, we'd have a rash of refis this year because of the low interest rates. That's helped people with their debt services with respect to the rates they're paying on their homes and their mortgages. You just look around and you feel a lot more confident about your situation than you did 2 years ago, 1 year ago, and maybe even 6 months ago. And that's when you go out and spend what's in your wallet.
Now, Greg Valliere just brought up a point. There's a time when we start to see yellow red flags when things are too good, right? In 2007, everyone was excited. Everyone was flipping houses. I can remember back in the day when I had an uncle. He always had a brand new Mark IV, but he lived in a trailer. You know, we get to a point, Scott, where people are spending more than they have. Are you concerned we're nearing that point yet?
No, because that's a great point to throw out there, though, because that will happen at some point. I mean, that's truly close to the end of the run, as it were, and that will come again. I mean, that'll be the time to kind of hold things in here. But the reality is, if you just look at the scenario now versus the 07, Charles, or versus the 99, we don't have too much excess leverage in the system. You know, rates still have a ways to go, I believe, on the upside. You still need to have a pretty big rise in, say, wage growth before that overheats. Inflation rates are still very, very low, and the Fed has remained committed to keeping the stimulus going, I think, both in the United States and certainly central banks around the world. So that should keep the party music going a little while longer before things get too hot.
I'm glad you brought up inflation and the Fed, because in this Michigan sentiment read, 5-year outlook for inflation went to an all-time low. And I hear Jay Powell always talk about what consumers expect as they set policy, and their policies can't, they can't upset the consumer. If the consumer is looking for low inflation, he really has to make sure there's low inflation.
He does, but I also caution the Fed to be too penchant or too hell-bent on keeping inflation so low, because inflation's not a bad thing necessarily if it's the right kind of inflation, if it's demand-driven inflation, if it comes from a strong economy, from a strong jobs market. And so that's something, too, that I think we will have to start to expect here in 2020. I think that's really the next phase of things. And everybody's looking for this next area of growth. I think it's just general kind of uplifting of inflation that tends to bring up asset prices and risk assets. It's something we'll see next year as inflation kicks in.
Next year, also, this new USMCA is going to kick in. Steve Mnuchin says it could be anywhere from half to a full percentage point in GDP. How do we benefit from that? Are there any particular stock investments tied to that for you?
You know, I've done a lot of reading on USMCA and a lot of the potential beneficiaries that are out there. I mean, look, it's great to get the trade deal done finally after it sat on the floor of the House for many, many months because Canada and Mexico are very important and big trading partners of ours, Charles. There's two areas. I mean, one's kind of the industrial railroad space and the energy space, frankly. And those are two areas that I like a little bit, not overly so. I mean, there's a couple names in there that one could pick out if they were so inclined. I like to stick with the S&P 500 myself if you're looking at a true beneficiary to USMCA.
By the way, I love Kansas City Southern for that
KSU.
play. They own a Panamanian Railroad and a Mexican Railroad. I think that's going to be the biggest direct winner. Okay, so we talked about Winnebago. We talked about Carnival Cruise Lines, USMCA. What else should investors know? I mean, a lot of people are looking now to get into this market, even after the 11-year run, and they want to make money. Obviously, they want everything. What exactly are you looking at now? Have you gotten a little bit more aggressive, Scott?
They want everything. Yeah, a little bit here and there, Charles. On pullbacks, yes. I mean, we've talked about some names, Charles, we've picked up that have dropped. I mean, there's just been some stuff that's just been thrown out with the baby and the bathwater recently. Expedia was a few weeks ago. Casey's General Stores was one from a couple weeks ago we picked up. I will tell you, though, just speaking about people wanting everything, I still like Visa, Charles. We have talked about Visa since you and I basically have known each other, pretty much since the IPO. Visa's still, to me, that one, hey, it gets you everything kind of stock because everybody uses their Visa or their MasterCard. So I keep liking to swipe, and I think I keep liking to swipe some stock of Visa in my portfolio.
I love Visa, too. By the way, folks, Visa is considered by the S&P a technology stock, just so that you know. Hey, Scott, you're the best, my friend. Thank you very much.
See ya.